Will this rally in the AI stocks hold the market up? Or will the fact that we're at this important level of resistance on the NASDAQ mean that we are going to fail and start to fall lower? In today's video, we're going to take a look at everything. I'm going to give my thoughts on the market overall, and we're also going to update on the AMD short, as well as any new positions that I'm holding currently, all right? So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And without further ado, let's get started with the video. First and foremost, we are short AMD. This is nowhere near a bullish. This is not a bullish setup. In no way, shape, or form should anyone ever buy AMD up here. So we're currently short June puts. I'm expecting a move back down to around $94 to $95 on AMD. I would be very, very surprised if this 23.6% fib level here holds. And I would be very surprised if we just break into a new high. But regardless, for these puts, we're going to be having a 15% stop loss. So if the contracts end up going 15%, more than 15% to the downside, we're going to stop out. And by that point, the contracts might be around the highs here, or it might have broken above the highs. So depending on where we are on AMD, depending on how we close, even though we will sell out of this at 15%, we might end up re-entering at a better position because, first and foremost, AMD made a very monster move to the upside already. So it's up over 20%. And it just makes sense that, yes, if this will continue to be a bullish move, we should see a bit of a correction before we continue higher. So that's my thought process with AMD. And also the fact that AMD, first of all, AMD looks very weak. This is a very bearish pattern and a bearish candle as well. This is a really, really bearish candle. And this red candle here as well is two candles basically showing extreme weakness at a level of resistance, but the fact that we're holding support is not good. The other thing that we need to take a look at is what Nvidia is doing and the other chips. So Nvidia is also showing weakness here at a level of resistance, but we can see that it is in a bit of an uptrend. So we're currently above the uptrend, but you can see that these levels of resistance are not breaking to the upside. And today we actually broke below the swing low here, basically from May 8th. So we dipped down below it a bit here. We're showing weakness at a level of resistance, red candle. It makes sense to lean short, in my opinion, for a continued move to the downside on the chips. And then also when you look at MU got a bit of a bounce, but still it has not broken above any major level of resistance. So there's my thought process on the current trade for AMD. Next, this is a bit of a fun trade. We took Lotto puts expiring in 2 weeks on the SPY, so 405 puts. And the reason for that is because currently we're showing weakness at this 412 level. Yes, we closed above it, but we're technically showing weakness here. So we aren't able to completely close above with strength, and we're not making any definitive candles. And also, yesterday's candle was a very important reversal candle. Today we fell down even lower. What could end up happening tomorrow is we could bounce back to around 413, 414, and then that's when the market is really going to have to make a decision. So in the meantime, in case we don't get a bounce back up to this level, I entered into 405 puts expiring in 2 weeks. This is basically a lotto, and I'm basically expecting the market to get a strong move to the downside. And if that is going to be the case, then these puts are going to be up huge. So we're not risking that much. And in exchange, we're going to, if this play ends up working and we really start to fall very dramatically, then this can pay out very, very well. So the SPX paints a bit of a better picture because this is a trend line. This green trend line here is a trend line from December 2009. Once again, we're showing weakness here. And the fact that we continue to show weakness the momentum is clearly bearish. We are failing to break above levels of resistance. You can see that we're at a very important trendline resistance as well. So the reason why I entered into the 405 puts on the, just looking at the chart of the SPY itself, right? Not taking into account any of the other things we're going to talk about and the other bearish reasons why I'm going to, it helped going short. Just looking at this chart purely right now, right? It really looks like if we get a really, really strong move to the downside, like it's just basically setting up for a really explosive move to the downside. That's basically what's going on. So we can either get faked out. This can easily rip to the upside. That's why these are lottos, and I bought them very out of the money, very cheap for 2 weeks out. But this whole setup right now, if the downside momentum, so looking at the SPX right now, right, from a bullish standpoint, when looking at everything, it's still technically, we're above levels of support. Things are in an uptrend. We still have, room to go to the upside. I understand that, but immediately, right, when looking at this on a like zooming out a bit, right, basically, if the bearish momentum can continue, then tomorrow or the next day is really going to be a very weak day, especially if we can't break above these levels of resistance, because multiple days of trying to break above resistance and failing is going to eventually lead to buyers being exhausted and then a huge move to the downside. So you have to look at it from the standpoint of, we bounced off of these levels of support, right? We came down to these levels of support, bounced perfectly, cool, right? But now, after we bounced, we came back, retested, and retraced, right? So the market has to make a very important decision soon. So either we're going to continue moving up, which I don't think is going to end up happening, or we're going to just fail here and fall much lower. So the decision basically needs to happen very quickly. And because the decision needs to happen quickly in the next coming days, that is why it makes sense and why I think the market is going to end up falling, purely looking at the chart here. The other things that I want to take a look at is basically this rally so far has been being held up by large tech stocks, specifically the ones that have AI implemented in them. So Microsoft and Google. But currently looking at Apple, this is not a candle where people want to go long on. We broke into a new high today, but this is a doji candle showing indecision at resistance. So once again, if we do end up continuing up, there should be a bit of a pullback, enough to make people extremely bearish. And then once people become extremely bearish, then sure, you could rip it up. But right now is not essentially when you want to go long. I would be very, very surprised for them to bring the tech stocks up, given the fact that there is just extreme strength right now in the tech. So Apple, this is not the most bullish setup, but when you're looking at Google super, super strong. You're like, it would be very, it wouldn't make any sense to really go long here. You would want to pull back. All right. Microsoft, again, like, this is being held. The market is really being held by Microsoft and Google. Things look really, really strong on both of them, but you don't want to add to longs when the move has already happened so substantially to the upside. And unless you're a big money player, most retail are not going to be entering here. But the other issue is that Amazon also is showing like extreme strength. So Amazon, Microsoft, Google, they're all showing extreme strength to the upside. And once again, like, when things are extremely strong, you don't expect them to continue immediately. There should be a bit of a pullback. The NASDAQ, we're going to take a look at that as well. But the SPY is showing weakness. The chips are showing weakness. These large tech stocks are showing extreme strength. So you can't expect everything to continue to the upside. And then last but not least, for this trade specifically, this is a chart of the NASDAQ. You can clearly see that the NASDAQ is trading right at its upper level here at the rising wedge. It makes sense that this basically acts as a level of resistance. We should get a bit of a pullback, but of course we could continue up. Once people become extremely bullish on this break to the upside, again, I mean, that would make a really good case for people to be bullish, but then that would be the best opportunity for people to be short. And in case that happens, we're going to get stopped out of our puts. That doesn't really matter. But if it doesn't happen and we fail here, just from a technical standpoint, it makes sense to take this trade. It's a high quality setup. The large tech stocks are showing extreme strength and overextension. It's not the best opportunity to go long on any of them. Everyone is hoping for a pullback, and the chip stocks are also showing a lot of weakness. SPY is also showing a lot of weakness as well. We're failing to break above levels of resistance. So all of those things combined is reason why we're basically leaning short the market. This is another look of what I was talking about. So this is a chart of the SPY on a 5-minute chart. You can see that there were two rising wedges that were created. The first one we broke out of towards the end of the day. The second one from this trend line onwards is we're technically at the bottom of the rising wedge. So we could continue up to the SPY at 413, 414. That's why I said earlier we could end up touching 413 to 414 tomorrow. But from there, that would be a better opportunity to go short for another move down. And in case we don't get up here, it makes sense to go short here for a move down. And that is basically my thought process. There's a lot of weakness overall in the market. If we continue to show strength overall, you know, the daily momentum on the NASDAQ, things look clearly, things are bullish. If you're just looking at them in a vacuum, we're in an uptrend, things look bullish, right? But it's starting to get to the point where there needs to be a bit of a pullback, in my opinion. And if we don't get that, then we will just lean long. We'll just continue leaning long during the day. It's not that serious. We're going to make money regardless, but just in terms of swings, it's a really just technically sound trade. If it doesn't work out, it doesn't work out. But yeah, with all things considered, SPY puts and AMD puts, but yeah, that's basically my thought process. The other thing that we can take a look at is the dollar. So the dollar is starting to get a lot of love once again, and it's bouncing off of its lows. So the strength in the dollar may end up being eventually, if the dollar continues to show a lot of strength, this could also mean weakness in the stocks. So this setup right here on the dollar can end up being a reason why stocks sell off a bit also. So overall, there's my thought process. I hope you guys enjoyed today's video. If you guys have any thoughts or anything, please let me know. And I really appreciate all of you guys' support. Make sure you guys like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.